All right, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for September 13th, 2021. It's Monday. So let's take a look at the market health check. So the first thing I want to just notice is that, the last time we had an extended sell-off, all of the channeling and overreactions fired, and then that turned out to be a really good move. That move right there was very good. Whether you took the 1, 2, 3 entry here, so that would be a 1, 2, 3 entry right here, or if you waited for price to cross the dragon and take out the PSAR, or if you waited for the RL10 to cross, or if you waited for the higher high of the RL10 to take out that, any one of those four still gives you a reasonable move to the top. This little price action in here, this failure to follow through, gave us some early warning that this thing that had moved from Z minus 2 to Z plus 2, that's a plus 4 sigma move. That's an exceptional move. And so as we started getting the 1, 2, 3 exit, here's the 1, 2, 3 exit right here at 452. And today things are down at 444. So that little warning was an additional 2% protection of locking in the gains. And in fact, if you're still holding that position when you're down here, I mean, look at all of it. That takes you all the way back really to the original 1, 2, 3 entry, and it negates all of these gains. And notice that this happens in 5 days where that took 10 days to make the gains. So in swing trading, particularly at extended prices like this, that little bit of fine tuning can certainly make a difference in your overall performance. If you're able to make a 2% difference just once a month, I mean, you're talking about a 20 to 30% improvement overall in performance by attending to your knitting and paying attention to these kinds of turning points. So now we are in an interesting moment here. I've coded this kind of as yellow because we've had the sell-off that has come down almost to the 2.5% sell-off. It eclipsed the Bollinger Band mean, came halfway down, and then closed at the Bollinger Band mean. So this is sort of this move here that terminates in this little space really is the reversion to the mean that is the least surprising move of all. So we have to be aware of what would be the least surprising move on a statistical basis, and that's it right there. And then you'll notice that the 1, 2, 3 exit actually gives up one third of the move down to the Bollinger Band mean. So if this move here is 1, if that's how much you're willing to give back, then here's 1 and 2 units of risk that it avoids. By giving back that much and taking the exit, you're preserving 2/3 of the gains that were earned on the way up. So that's just another way to think of this in terms of the psychological management of risk. Okay. Yeah. All right, so other things that we're noticing, we notice that the PSAR is flipped and it is pointing gently but certainly downward. The RL30 has rolled over and is pointing downward. We've got the RLXD has occurred, so that's a P1. That's pattern 1, which is an RLCO, regression line crossover, which means that it happens outside the river. Outside of the river, because here's the river, and here's where the RL10 crosses the RL30. Here's where the RL10 peaked. Here's where it crossed the Baby Dragon. So at A it peaks, at B it crosses the Baby Dragon, at C you get the P1, which is the RLCO outside of the river. At D you have the RLXD, where the regression line has crossed the dragon. Right here is where it enters the river, and here's where the RLXD occurs. Here's where it takes out the PSAR. Here's where it touches the Bollinger Band mean. So as you look at that cascading effect, you realize that there's all these little checkpoints like road signs on the way down. And so you get to decide which one of those is the strike price for you. Which one of those is the indicator that leads to action? Do you want to trigger on the first one, the second one, the third one? So that all has to do with timing, using our statistical measures to shape your judgment. I'm noticing that the Bollinger Band means are starting to compress and converging back towards the Bollinger Band mean. So the expansion, which was driven by that move, now the contraction or the convergence is happening, and now the expansion is over. It's starting to roll in. So that's also a signal of converging more towards that Bollinger Band mean price. But now we can say, well, the Bollinger Band mean price is there. What if we put a tight box around that? There's actually enough room for this now to trade back to the previous swing high, and there's also enough for this to trade down to Z minus 2. So from Z0, it can get to up here, which is about Z2, and it can trade down to here to Z minus 2, and that becomes, again, about another 2% move overall. So if we can trade with about a $2 or $3 risk inside the S&P, that gives us 1, 2, 3 to the upside, 1, 2, 3 to the downside. There's now a 3-to-1 move in either direction, which we can now start framing intraday now that it is back to the least surprising price area. So I would be looking right exactly here. In fact, if it goes below yesterday's low again at like 445.50, bang, short. And then there's the 10-day low, and then here's the 2.5% sell-off, and then here is the Z1 and the collapsing dragon. So inside this little cluster right here, there's a lot of little tripwires that could really send this thing crashing to the downside. On the other hand, there's been enough sell-off that this creates a nice little buy-on-dip opportunity for everybody that is optimistic. So that makes this a critical state. We can make a equally convincing argument for a larger than normal move in a short period of time in both directions in a reasonable fashion. So that's the very definition of a critical state. Okay, so that's where we are. All right, next up, we'll take a look at the sectors now. Okay, so we'll start with the S&P, up a quarter at plus 0.26. Emerging markets were up 0.27. Then a cluster of the remaining of most of the other U.S. indexes. There's the Russell at 0.57, Treasuries at 0.6 to close within a hair of 150. Diamonds up 0.75. And then the laggard today was tech, which was basically flat at minus 0.07. So let's take a look at things that outperformed the S&P significantly. First, there's DBC, the blended commodities, 0.77. Then a cluster going from 1.1 to 2.8 of finance, clean energy, oil, Brazil, commercial real estate, and energy again. And then notice the two top plays are both energy related. Oil exploration, 4.12%, and then Devon Energy, the mid-cap U.S. oil oil company at 3.03. Tesla, a nice solid performance at 0.9 to close at 743 within spitting distance of key price level of 750, which it has to get through. Microsoft and Apple, 0.4 and 0.43, so they're starting once again to lead the way. And it's good that those two bellwethers are better than the market on a day when the market was better than the broad tech sector. So that sort of indicates that Microsoft and Apple are back in play as value plays. And then I want you to notice that let's see, Apple is in the daily summer, Microsoft in daily fall. So both of those are postured above the zero line and are postured ready to make gains. Just below the S&P, within a hair's distance, staples, discretionary, tech, and materials, not much to choose from inside there. Then as we start looking at the sectors that underperformed today, blockchain and marijuana down 0.16 and 0.17, agriculture and moonshots 0.27 and 0.3, biotechs 0.5, the FANGs minus 0.6, which makes the performance of Microsoft and Apple all the more impressive. When the other large cap darlings got smacked today, Microsoft and Apple were in good shape. Lumber and wheat and precious down 0.7 and 0.8. The other lumber minus 1.53. And once again, cut continues to outperform wood on a regular basis. So if you're looking for lumber, I mean, to me, that it's all signs point to cut. Lithium minus 1.67, Ethereum minus 1.87, holding above the key price level of 31. I like that. Arc Innovation minus 1.9, Arc Genomics 2.3, Bitcoin Trust 2.9, VIX and the large cap blend of crypto minus 3.6 and minus 7.2 respectively. The underperforming companies, Virgin Galactic and Cliff, U.S. Steel minus 2%, Coinbase 2.25%, Robinhood, PayPal, Squarespace, so the disruptors in finance suffering in the same way that crypto was today. So to me, this is kind of energy, and then the key legacy tech were the big news for the day, and I think that's where we want to stay focused. I think everything energy and even finance looked pretty good. If you recall, Ken H gave us a critical state in FAZ. And we said if that doesn't work, then be looking for the rebound in FAS, and that's kind of what would have happened today. It would have been up a little over 3.3%. So a very tradable move in the triple leveraged broad finance. All right, let's take a look at just one chart posted today. So let's get that one up on the screen. Annotate. All right, so the first one was just as perfect as it could be. This is Cliff, and this was yesterday's tight little closing range, and then there was this sudden sell-off, and so he gets a hybrid frog box short with a PSAR flip as the risk. He gets down, recovery, and resume. This would have been tempting as a second position. I don't mind just getting the one position. And now we got a perfect stop. He gave it 5 bars. It didn't fail further, and as soon as it began to nudge across the dragon, he stopped and reversed, and he still makes bank on the second one of a 0.25. Now, did we give back more than half? Yeah, but still, that happened pretty fast, and I'm just pleased to see that we made bank on that one instead of scratching. And then this one, he reverses once more into the direction of the primary trend, which is following, again, The RL 270 is pointing the way down. The VWAP is pointing the way down. This little recovery barely budged it, right? So he gets back on board in the pocket. He doesn't wait for the breakdown here. He gets it more like he actually front runs the dragon a little bit and makes a really nice entry short, and gets 1, 2, like 1 point, 1.5, and then gets a second position in, which I like, and then a quick recovery. So that's a nice effort on the second one. This would have been tempting here as a second position based on a collapsing dragon. I could make an argument, why we might want. Let me show that here. Yeah, why we want when this little RL10 reverses, why this makes a reasonable second entry if you got the first entry here. This one waits a little bit too long. I think if we come over here and take a look at where the Z3 line pinches, this is almost a Z3 excursion right there, and we might have thought about getting the second position here, because if you've got your first position here and this is your wrist box, this one gets you 2R in hand with momentum. So that's the way I've been teaching it. But by the same token, when you have a runaway train and it breaks out below that Z3, this might have been a place for a second one, which turns this into a win. So that's just something to, as you start getting refined skills and a little more confidence, you can start maybe taking a look at. I do like the immediate stop and reverse. It would have been tempting to add a second position here, but I respect that he's working on one, and then this is a nice cover, and now short. This one, as we start moving later into the day, yes, I agree, left too much on the table. There were 5 bars when it didn't fail, and maybe we could have been a little bit better, but still, you weren't going to do much better than 0.3 anyway. And then this one is maybe a little late getting in. Maybe we could have gotten it here. And then that makes it, instead of a 0.4, it might have been a 0.7. But if you can get 0.2 on an additional 0.2 and an additional 0.2, pretty soon those little micro improvements are adding up to half an R. So that's not bad. This was a reasonable effort, good micro loss. This was a great follow through, a great reversal. Dude's killing it. So pretty nice work all around today at 6.5. You can make a living on that one. And it feels like, the 400 tick. So this was a 400 tick, and we've seen Luke working with the 800 tick before. This one seems to give him a little more wiggle room and a little more clarity on the reversals. And the performance was better. So I'm thinking, as he's trying to find the right timing that fits his psychology and skills, the 400 tick is starting to look pretty good in my view. And Luke, at some point, once you settle into a certain structure, you're going to want to do a histogram like Nigel has done, so that we can start looking at ways to improve standard performance. You got to settle in on standard practice, and then work on system improvement. So that's sort of the next step. Once you lock in the timing that you want. Okay. So that's that. Let's jump to the. We are going to jump to. Whoops. To the daily report. Okay, so. All right. Still bullish, quiet. A little bit of last minute recovery got us out of the red and back into the yellow. But we're still cautious because of risk Z. Cautious because the percent stretch relative to the 200 is starting to show some weakness in the red. We are below the zero line, and that makes this vulnerable to downside. Only the MDY triggers on the overreaction systems today, though. One more day of selling, and I would expect that to begin to fire a little bit more. On the daily Dow tactical, just one doji, handful of channeling and overreactions in there, and plenty of auto framers to choose from. 3 5DDs, including a high priority should be Johnson & Johnson. It's a channeling and overreaction of 5DD and tests out at 3 to 1. Merck is also pretty good. It's a 5DD and 3.3 to 1. And then Pfizer in that same space, the farms, is channeling overreaction and a 5DD. So we got to like that. Got to respect that. In the Dow Tactical, 4 dojis today, plenty of channelings and overreactions to deal with. And then notice quite a few auto framers setting up. That would be, in my view, the priority of looking for key price levels tomorrow. I think XOP is certainly one also I could look for. It doesn't test out for the auto framer because energy was so good today, but then that becomes one for continuing follow through that we would like to look at. And you see that also with you see that in energy, and also Brazil has some possibilities for follow through. Lots to choose from on the auto framer. So as you know, I like to look at things that are better than 2 to 1, and that would be all of these. And I like that the Russell is in there. To me, Merck, Johnson & Johnson are really part of the key stories in here today. And that's supported by S&P Healthcare, which is also 2.2 to 1. Merck and Johnson & Johnson testing out at 3.3 to 1. I like the real estate, kind of a stealthy little play inside there as a defensive. And I like finance, which was strong today at 2.2. That's pretty good. So I'm in favor of all those. Like those. Only treasuries and gold fired on the squeeze. I like treasuries here for the defensive play. Anytime we got that market in such vulnerable conditions, then treasuries, which is at a key price level around 150, is that could easily break back through 150 if we saw market weakness tomorrow. So let's be mindful of that one. The S&P is at 1.6, so it's still in the upper, in the top 10 or top 15 in terms of squeezes. So today was still a relatively, on a percentage basis, a low range day, a small range day for the S&P, and mid caps were right there with it. All right. Predominating with winter in the ETFs, and a ton of fall in the Dow. I'm sorry, the other way, in the ETFs, and a ton of winter in the Dow, ton of fall here in the ETFs. The things that were favorable in the ETFs, worth looking at, there's emerging markets. Oil and energy are inside there. PBW and real estate are attractive for that reason also. Okay. There was a balance here in the sell-offs compared to the big gainers. I guess we would add Intel to the outperformance of Microsoft and Apple today as like a legacy tech. And then treasuries, energy, oil, and oil exploration were the key winners today. Okay. We're at a critical state here on the sell-off. It's trying to hold support at that Bollinger Band mean at around 445. The slope of the RL30 is not extreme down by any means, but it's become a little more noticeable than it was before, and that's why I would put this at a critical state. And then in terms of the S&P's stretch above the 200, this is the key price level. It's now 2 sigma on the stretch to the downside, and after every one of those excursions, there was a little bounce. You have this bounce, you have this bounce, you have this one, this one, this one, oops, I should say, a little bounce here. So now, would we be we're not allowed to be surprised if it does rebound from the Bollinger Band mean, and the only issue is that this is just decaying. It hasn't bottomed out yet in terms of the slope of the 30, but in terms of just price location, this would be a natural place to begin to see some rebounds. So let's be mindful of that. Everything else looks pretty much normal. The S&P still remarkably quiet in terms of volatility. All right, so that's everything we got for today. Let's be ready for tomorrow, and I shall see you in the chat room. Good work today, Luke. Keep working hard.